Hey guys, how are my guys doing on this lovely day? Today, I had some plans as to what I wanted to talk about, more in line with inflation, but that will be put aside for another video. I have been requested non-stop to cover the recent topic of Cellar boxing. Comments on my YouTube and Twitter have surged with people asking me to talk about it non-stop, and the day has come where I deliver. We will briefly mention some stuff that I think is relevant to talk about, but the main segment will be a general overview to Cellar boxing and breaking it down. As for the Yahoo data, I will make tomorrow's main segment about it. There is one last piece of information I need to corroborate before I give you my thoughts on it. The Yahoo data portion, for those that don't know, claims that Yahoo is changing stock values depending on your IP address. Using this, deductive reasoning has brought people to find a floor on the amount of shares that there are out there in the market. There is a ton of stuff we need to go over between today and tomorrow. Before we get started, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, whose contributions continue to carry this channel forward. Thank you so much to all that have taken a moment and the burden of throwing some love my way. It means a great deal for the longevity of the channel. You guys are the absolute best. Now, let's dive right in. Quickly before we head to the main segment, let me quickly update you guys about something serious taking place on the economy. Global supply chains are strained right now, leading to produce price increase. Some of the links have also started to break down. Shortages of metals, plastics, wood and now even liquor bottles are increasing at a very rapid pace. As Reuters pointed out in an article today, there's a growing tension among Federal Reserve policymakers over how to gauge the long-term impact on prices. However, this debate pans out will influence how quickly the Fed moves to reduce the pace of assets purchases and how soon it lifts the policy interest rates from its current level near zero. I thought it important to mention this to you guys because it signals a lot of the problems that are slowly leading to a full economic collapse. I plan on making a full breakdown of this issue for a morning video this week which will explain what is going on and what it means for the overall economy. So, let's get to the main segment once and for all. A post on Investor Hub written by a user named Blurring was unearthed by a Redditor named The Bat on the Super Stonk community. This post, titled Cellar Boxing, goes to explain and break down naked short selling, which has become an incredibly lucrative practice to manipulate markets. I personally think the writing on this is easy enough so that even the smoothest brain understands it. Let's go over it first, and then I will smooth all of it out even further so that even the unwrinkled can understand everything. Let's get started. Cellar boxing. There's a form of the securities fraud known as naked short selling that is becoming very popular and lucrative to the market makers that practice it. It is known as cellar boxing, and it has to do with the fact that the NASD and the SEC had to arbitrarily set a minimum level at which a stock can trade. This level was set at 0.0001 or 1/100th of a penny. This level is appropriately referred to as the cellar. This 0.0001 level can be used as a backstop for all kinds of market maker and naked short selling manipulations. Cellar boxing has been one of the security frauds du jour since 1999 when the market went to a decimalization basis. In the pre-decimalization days, the minimum market spread for most stocks was set at 1/8 of a dollar and the market makers were guaranteed a healthy spread. Since decimalization came into effect, those 1/8 of a dollar spreads now are often only a penny, as you can see in Microsoft's quote throughout the day. Where did the unscrupulous market makers go to make up for all of this lost income? They headed south to the OTCBB and pink sheets where the protective effects from naked short selling like Rule 10A, and NASD Rules 3350, 3360, and 3370 are non-existent. The unique aspect of needing an arbitrary cellar level is that the lowest possible incremental gain above this cellar level represents a 100% spread available to MMs making a market in these securities. When compared to the typical spread in Microsoft of perhaps 0.4%, this is pretty tempting territory. In fact, when the market is no bid to $0.0001 offer, there is theoretically an infinite spread. In order to participate in cellar boxing, the MMs first need to pummel the price per share down to these levels. The lower they can force the share price, the larger are the percentage spreads to feed off of. This is easily done via garden variety naked short selling. In fact, if the M is large enough and has enough visibility of buy and sell orders as well as order flow, he can simultaneously be acting as the conduit for the sale of non-existent shares through Canadian co-conspiring broker-dealers and their associates with his right hand at the same time that his left hand is naked short selling into every buy order that appears through its own proprietary accounts. The key here is to be a dominant enough of a market maker to have visibility of these buy orders. This is referred to as broker-dealer internalization or naked short selling via desking, which refers to the market maker's trading desk. While the right hand is busy flooding the victim company's market with counterfeit shares that can be sold at any instant in time, the left hand is nullifying any upward pressure in share price by neutralizing the demand for the securities. The net effect becomes no demonstrable demand for shares and a huge oversupply of shares, which induces a downward spiral in share price. In fact, until the beefed-up version of Rule 3370, affirmative determination in writing of borrowability by settlement date, becomes effective, American market makers have been legally processing naked short sale orders out of Canada and other offshore locations, even though they and the clearing firms involved knew by history that these shares were in no way going to be delivered. The question that then begs to be asked is how the system can allow these obviously bogus sell orders to clear and settle. To find the answer to this one need look no further than to Addendum C to the Rules and Regulations of the NSCC subdivision of the DTCC. This gaping loophole allows the DTCC, which is basically the 11,000 BDS and banks that we refer to as Wall Street, to borrow shares from those investors naive enough to hold these shares in street name at their brokerage firm. This amounts to about 95% of us. Theoretically, this borrow was designed to allow trades to clear and settle that involved legitimate 1 or 2 day delays in delivery. This borrow is done unbeknownst to the investor that purchased the shares in question and amounts to probably the largest conflict of interest known to mankind. The question becomes, would these investors knowingly loan, without compensation, their shares to those whose intent is to bankrupt their investment if they knew that the loan process was the key mechanism needed for the naked short sellers to effect their goal? Another question that arises is, should the investor's BD, who just earned a commission and therefore owes its client a fiduciary duty of care, be acting as the intermediary in this loan process, keeping in mind that this BD is being paid the cash value of the shares being loaned as a means of collateralizing the loan, all unbeknownst to his client, the purchaser? An interesting phenomenon occurs at these seller levels. Since NASD Rule 3370 allows market makers to legally naked short sell into markets characterized by a plethora of buy orders at a time when few sell orders are in existence, a market maker can theoretically legally sit at the $0.0001 level and sell non-existent shares all day long, because at no bid and $0.0001 ask, there is obviously a huge disparity between buy orders and sell orders. What tends to happen is that every time the share price tries to get off of the seller floor and onto the first step of the stairway at $0.0001, there is somebody there to step on the hands of the victim corporation's market. Once a given microcap corporation is boxed in the cellar, it doesn't have a whole lot of options to climb its way out of the cellar. One obvious option would be for it to reverse split its way out of the cellar, but history has shown that these are counterproductive, as the market capitalization typically gets hammered and the post-split share price level starts heading back to its original pre-split level. Another option would be to organize a sustained buying effort and muscle your way out of the cellar, but typically there will, as if by magic, be a naked short sell order there to meet each and every buy order. Sometimes the shareholder base can muster up enough buying pressure to put the market at $0.0001 bid and $0.0002 offer for a limited amount of time. Later, the market makers will typically pound the $0.0001 bids with a blitzkrieg of selling to wipe out all of the bids, and the market goes back to no bid and $0.0001 offer. When the weak-kneed shareholders see this a few times, they usually make up their mind to sell their shares the next time that a $0.0001 bid appears and to get the heck out of Dodge. This phenomenon is referred to as shaking the tree for weak-kneed investors, and it is very effective. At times the market will go to $0.0001 bid and $0.0003 offer. This sets up a juicy 200% spread for the market makers and tends to dissuade any buyers from reaching up to the lofty level of $0.0003. If a $0.0002 bid should appear from a market maker not playing ball with the unscrupulous market makers, it will be hit so quickly that level 2 will never reveal the existence of the bid. The $0.0001 bid at $0.0003 offer market sets up a stalemate wherein market makers can leisurely enjoy the huge spreads while the victim company slowly dilutes itself to death by paying the monthly bills with real shares sold at incredibly low levels. Since all of these development stage corporations have to pay their monthly bills, time becomes on the side of the naked short sellers. At times it almost seems that the unscrupulous market makers are not actively trying to kill the victim corporation but instead want to milk the situation for as long of a period of time as possible and let the corporation die a slow death by dilution. The reality is that it is extremely easy to strip away 99% of a victim company's share price or market cap and to keep the victim corporation boxed in the cellar, but it really is difficult to kill a corporation, especially after management and the shareholder base have figured out the game that is being played at their expense. As the weeks and months go by, the market makers make a fortune with these huge percentage spreads, but the net aggregate naked short positions become astronomical from all of this activity. This leads to some apprehension amongst the co-conspiring market makers. The predicament they find themselves in is that they can't even stop naked short selling into every buy order that appears, because if they do, the share price will gap, and this will put tremendous pressures on net capital reserves for the market makers and margin maintenance requirements for the county conspiring hedge funds and others operating out of the more than 13,000 naked short selling margin accounts set up in Canada. And of course, covering the naked short position is out of the question, since they can't even stop the day-to-day naked short selling in the first place, and you can't be covering at the same time you continue to naked short sell. What typically happens in these situations is that the victim company has to massively dilute its share structure from the constant paying of the monthly burn rate with money received from the selling of real shares at artificially low levels. Then the goal of the naked short sellers is to point out to the investors, usually via paid internet bashers, that with the, let's say, 50 billion shares currently issued and outstanding, that this lousy company is not worth the $5 million market cap it is trading at, especially if it is just a shell company whose primary business plan was wiped out by the naked short sellers' tortuous interference earlier on. The truth of the matter is that the single biggest asset of these victim companies often becomes the astronomically large aggregate naked short position that has accumulated throughout the initial bear raid and also during the seller boxing phase. The goal of the victim company now becomes to avoid the three main goals of the naked short sellers, namely, bankruptcy, a reverse split, or the forced signing of a death spiral convertible debenture out of desperation. As long as the victim company can continue to pay the monthly burn rate, then the game plan becomes to make some of the strategic moves that hundreds of victim companies have been forced into doing, which includes name changes, CUSIP number changes, cancel reissue procedures, dividend distributions, amending of bylaws and articles of corporation, etc. Nevada domiciled companies usually cancel all of their shares in the system, both real and fake, and force shareholders and their BDs to prove the ownership of the old real shares before they get a new real share. Many also file their civil suits at this time also. This indirect forcing of hundreds of American microcap corporations to go through all of these extraneous hoops and hurdles as a means to survive, whether it be due to regulatory apathy or lack of resources, is probably one of the biggest black eyes the American financial systems have ever sustained. In a perfect world, it would be the regulators that periodically audit the C&D sub-accounts at the DTCC, the proprietary accounts of the MMs, clearing firms, and Canadian BD, and force the buy-in of counterfeit shares, many of which are hiding behind altered CUSIP numbers, that are detected above the Rule 11,830 guidelines for allowable failed deliveries of 0.5% of the shares issued. American microcap corporations should not have to periodically purge their share structure of counterfeit electronic book entries, but if the regulators will not do it, then management has a fiduciary duty to do it. A lot of management teams become overwhelmed with grief and guilt in regards to the huge increase in the number of shares issued and outstanding that have accumulated during their watch. The truth, however, is that as long as management made the proper corporate governance moves throughout this ordeal, then a huge number of resultant shares issued and outstanding is unavoidable and often indicative of an astronomically high naked short position and is nothing to be ashamed of. These massive naked short positions need to be looked upon as huge assets that need to be developed. Hopefully, the regulators will come to grips with the reality of naked short selling and tactics like cellar boxing and quickly address this fraud that has decimated thousands of American microcap corporations and the tens of millions of American investors therein. As I read this over and over in my head, I kept thinking about the millions of people who have been affected by this. I thought back to seeing thousands of people lined up with signs asking for money when they lose their homes in 2008. I thought back to videos of parents crying and hiding it from their kids, as their jobs and industries collapsed, their pensions vanishing in one day. And most controversial of all, I thought about market makers and hedge funds, about the banks and insurance companies. In a way, I am not even mad at them. I have come to accept them to be the way they are. Instead, a very palpable rage and frustration dawned on me against the SEC, against the federal government, and against the DTCC. Whoever this individual is, he has single-handedly provided us a clear defined blueprint as to how market makers have accidentally architected the greatest short of all time. Wall Street has single-handedly defiled every law out there, and have found passage into violating the laws of foreign country, most notably Canada, given the examples he gave. Funny enough, we have spotted yet again another glitch on a Bloomberg terminal showing more short holding of options located in Brazil. This supposed error, as Bloomberg customer service called it, seemed to have happened again. I am certain that this is not a glitch. This are accidental showing of the real positions that Wall Street has passed on to foreign companies. Given the statements made on this post we just went over, the hot potato theory has been corroborated to be true. Brazil, just as Canada, is involved in an illegal trading scheme that has clearly gone out of hand with the rise of meme stocks. Let me smooth out all of this a bit further. Naked short selling is a securities fraud that has been happening for a long time, but we know it as a key component that has created a squeeze for meme stocks that is yet to happen. Cellar boxing is a strategy that involves reducing a stock in its price down to the lowest possible value that it can go as defined by the National Associate of Securities Dealers and the SEC. The lowest number a stock can go is $0.0001, which, as the author of the post said, serves as a backstop. There is no protection from naked short selling in the OTCBB and pink sheets. Because of this, there is a potential for an infinite spread when there is no bid to $0.0001. The lower a market maker drives the share price, the bigger the percentage spread gets that they can exploit. For decades, market makers along with all their friends have been exploiting this strategy for a long time, bankrupting businesses and leaving millions of Americans jobless. They attempted to do this strategy to GameStop. They got caught by retail in the middle of this, and got absolutely screwed. It's over for Kenny and his pals. This is the best set of due diligence anyone has ever done, and it was written all the way back in 2004. What does that say about the standing of our markets? What does it say about the role of our government? To say they have failed us would be an understatement so criminal it should warrant arrest and prosecution. If ever you need a tutorial on what is happening, be sure to save this video by liking it and come back to it. It's been thoroughly explained by someone whose profound knowledge in the markets makes me conclude he is an insider and has plenty of experience in this area of expertise. Like I said in the beginning, I will make a video tomorrow talking about the whole Yahoo portion, so stay tuned for that. I will also talk about ComputerShare tomorrow. This video is long enough and I want to leave it covering this single major topic exclusively. Let's now talk about today. The Fed reported that reverse repo operations for today resulted in over $1.087 trillion, representing a small decrease over Friday's operations. AMC's dark pool transactions accounted for 65% of the total volume, while GameStop dark pool transactions accounted for 57% of the total volume today. According to Fidelity data, buy order flow for AMC was bigger than the sell order flow, with GameStop's buy order flow being almost twice as big as the sell order flow. Now, let us finish up with a recap of today's performance. AMC had a great day, gaining over 3% today. It begun trading pre-market with a slight surge, continuing the momentum it has seen over the past couple of weeks. The stock progressively moved up until market opened. There, AMC has a slight surge before dipping back down to 51. It attempted to surge again, only to fall back down to 50.40. After that, AMC started to move upwards at a nice pace, reaching 52.79. It then begun to experience a small retraction before hedge funds started a short ladder campaign. It wasn't very effective, as AMC still closed at 51.69, right on the VWAP. As for what I expect tomorrow, I think AMC has an excellent chance to keep on moving up. It has support at 50.75 and at 48.91. It will encounter resistance at 52.14, 52.79 and then at 53.77. I am bullish on this stock, though I will note that it has been running for quite a while, that a retracement should be coming relatively soon. But for now, I think we will keep on moving upwards, though be open to any surprise short attacks. always remember, have high hopes and low expectations. GameStop traded very bullishly, running and gaining almost 7% for the day. It began trading sideways with small surges over time. Once it crossed then VWAP, it started gaining momentum, reaching 208.88 at one point. GME then started finding a bit of a pullback that drove it back to a closing price of 203.40, above the VWAP. As for what I expect tomorrow, I think it all depends on whether we can hold support above 201. As you can see, if we are able to maintain this support, we will most likely test 208 and then 211. If not, we will find support at 195 and then 192. I want to be bullish about a surge in GameStop, but it really all depends on its ability to hold support. I bought a ton of GameStop today, if that says anything. You can hit me all you want, Kenny, I only know how to press the buy market button. And that's all I have for you guys today. It was a crazy video, but if you made it this far, I want to thank you so very much. I know it was a lot, but it was great information, by far the best DD that has been put out there. Today's big question is, at what point does striving for a better life turn from healthy to unhealthy? I am really curious as to what you guys have to say. Again, thank you so much for the love and support you guys give me. You are all so amazing and I love interacting and readying through your comments every day. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one. Enjoy the rest of your day. I will see you guys tomorrow, and to the moon.